Crypto analyst Willy was looking at retail traders of Bitcoin and noticing something he hasn't seen since the COVID-19 crash of March 2020. In a tweet to his followers, Wu shares a chart showing the amount of BTC that retail traders have been accumulating. According to the analyst's chart, retail traders are buying up Bitcoin's current market correction as quickly as they did during the pandemic-induced crash last year. The last time retail bought the dip this hard was at the bottom of the COVID crash. Probably nothing. Bitcoin markets went through another leverage-induced flush-out as on-chain analysts showed evidence of dip buying and potential rebound. Bitcoin's price remained below $48,000 Tuesday, up slightly from its drop below $4,000 to $6,000 on Monday. This is the lowest Bitcoin's price has been since early October. Bitcoin had been on the rise throughout the weekend before it started to drop late Sunday. The price of Bitcoin hovered between $4,000 to $6,000 and $52,000 last week, culminating in a sharp drop that began Friday. The past week's ups and downs follow a relatively strong start to the month for Bitcoin, which came close to its all-time high on Wednesday, December 1, when it hit $59,000 before falling back. Its price lately is closer to where it was in early October before a climb that lasted throughout November, when it hit its current all-time high over $68,000 on November 10 and into December. The volatility follows fresh comments from SEC Chairman Gary Gensler about cryptocurrency, uncertainty over the new Omicron variant of the coronavirus, and President Joe Biden signing a $1.2 trillion infrastructure bill last month that contains key provisions that could add the tax ramifications for crypto investors. Bitcoin prices hit a 10-day low of just below $4,000 to $6,000 during the Tuesday morning Asian trading session. The asset now sits on solid support at the 200-day moving average and needs to maintain this level to prevent another painful decline. Bitcoin has lost around 30% from its November 10 all-time high, but it is not the largest retracement of the year by any means. Between April and July, prices corrected by 54% before the bullish momentum returned. Willy created a heat map that shows a visualized representation of dip buying. He noted that it has been happening. It's moderate, but most importantly, as if there are no signs of a further sell-off cascade. Wu also shares a chart showing how Bitcoin hodlers or holders with little history of selling have historically bought the dip and how they are doing so now as well. Buying the dip visualized spot volumes seen on-chain. It has been happening, it's moderate, most importantly, as if there are no signs of a further sell-off cascade. Also worth keeping in mind, longs have already been flushed. Wu's tweets come on the heels of the on-chain analysts saying that when long-term holders reach peak accumulation, Bitcoin tends to ignite a strong rally that allows long-term holders to unload their holdings to a new batch of short-term holders. According to Wu's data, long-term holders just peaked within the last few weeks. Long-term holders are at their peak, and so generally when we're this zone, you've got peak accumulation. These guys tend to sell down in the rallies. You saw that in the last rally from October last year, and when they run out of ammo, the short-term holders hold those coins, generally the new weak hand investors. We're in the strong area that has been selling down, meaning they have instigated taking profits. He further tweeted that true bear markets happen not from sellers but when we are out of buyers. This is why macro tops are highly volatile. Buy-side liquidity drops away. Major long positions for Bitcoin futures have been liquidated in the recent price correction, suggesting a kind of reset. Besides, based on the buy-sell heat map, crypto analyst Willy Wu says that buying the dip has been clearly visualized. While the retail investors continue to face a test of patience and anxiety, the on-chain data has been hinting at strength. Will this translate into a good pullback or not remains to be seen. There is so much fear out there, but if you have been in this space for some time like us at Savvy Finance, you will realize that we have seen this kind of drop countless times and that the price will eventually trend upward. We see this as nothing but as an opportunity to keep adding to our stack. We are in for the long haul, so we are not bothered even if Bitcoin crashed down to $20,000 as some people are speculating. We know Bitcoin will eventually get to $1 million per coin someday, and we will keep hodling till then. Let us know in the comments how you are feeling in this dip. Are you buying the dip, peeing in your pants with fear, or worse, selling off your crypto?
Today's episode is sponsored by iTrust Capital, the #1 crypto IRA platform in America. We allow you to invest in your favorite cryptocurrencies without worrying about taxes. That's right, iTrust Capital allows you to buy and sell your favorite cryptocurrencies completely tax-free. That means if you invest $10,000 into Cardano and it grows to $100,000, all of your profits are tax-free. Why is it tax-free? We took the existing retirement account industry and flipped it on its head. Instead of boring stocks and bonds, you can invest in crypto. How is it secured? Through Coinbase Custody, one of the leading cold storage providers with a $320 million insurance policy to protect against theft, hacks, and loss of funds. Roll over your existing retirement account, or even start a new one from scratch. questions? Schedule a free call with one of our crypto retirement account specialists, and they can help you discuss your options. Start your crypto IRA today and retire early, only at iTrust Capital. Click the link in the description to open a free account now.
Thanks for watching. Till our next video, stay savvy and keep hodling.